What's up, military millionaires? I'm your host, David Perret, and today we have Zach Lemaster, the CEO of Rent to Retirement, which is a massive turnkey company that you've probably heard of, especially if you've ever, been around the BiggerPockets world, because they're all over the BiggerPockets world. In fact, I want to say they were one of, if not the biggest sponsor at BiggerPockets conference this year. I know I saw their booth front and center, and I hung out there a little bit. In fact, we were supposed to cross paths there, and I don't know. BiggerPockets conference was a blur for me this year, but Zach is a Air Force officer, veteran. He was an optometrist, and then he does some short-term rental stuff as well as multifamily stuff. In fact, short place that he has short-term rentals was close enough to where I just did a mastermind that he was thinking maybe we stayed at one of his houses, which would have been really funny. And then obviously owns a massive turnkey company, and we've talked back and forth a little bit over the last couple months, and wanted to bring him on the podcast and talk about, well, turnkey, one, because I think it's an investment strategy that definitely plays into different aspects of, depending on where you are in your career, it can be a very viable option, but also just curious to see how the market is affecting that strategy. And also, Zach's a cool dude. So here we are. Zach, welcome aboard, buddy. Hey, everybody. If you have not heard yet, we are doing a live in-person real estate event May 19th through the 21st in Tampa, Florida. I would love to see you there. We have 50 slots, 13 are already sold, and it's only open for War Room Mastermind members. So if you are a War Room member, make sure you head on over to the Circle community and grab your ticket right now, secure your spot. If you are not in the War Room Mastermind and you've been thinking about it, hit me up so I can get you that mastermind application, and you can get enrolled and get a spot because they're selling quickly. We only announced the spots 2 days ago, and like I said, 13 of the 50 are already gone. So I'd love to have you there. We're going to have some really cool speakers. We're going to do some happy hour, some drinks, some hangouts, some networking, some restaurants, some really cool speakers, guest speakers, keynote, whatever. And we're going to do some property tours and some cold plunges and sauna action. So good times for all. Come hang out. See you in Tampa.
David, thanks for such a nice intro, man. We love what you guys are doing with the military millionaire community. I think that's awesome. And it's a great way for people to, whether they're coming into the military or have previously served, just to have a tight-knit group to learn investing, right? And so I'm excited to be here. Thanks for having me.
Yeah, man. Well, you want to give a little bit more of your backstory? I'm sure there's a lot more in there other than he used to laser people's eyeballs and now he buys houses.
Yeah, and at the same time, really, is where our story went. But sure, so a little bit about myself. I'm from Wyoming. Went to undergrad there. I went to optometry school or outside of Portland, Oregon. That's where I met my wife. She's also an optometrist. I was on a health profession scholarship, so the HPSP program, as some people may be familiar. So I did my professional school, and then I went into the Air Force as a captain to fulfill my commitment. I ended up staying for 7 years. And so I practiced optometry there. I was stationed at Grand Forks Air Force Base, or I tell people I was deployed to Grand Forks in the middle of the winter when it was, blizzard storms out there. I also spent a short period of time at the Landstuhl Hospital in Germany. So that's next to the Ramstein Air Base. So yeah, I spent 7 years in the Air Force, and really that's where I started investing. David, my first house, as many of us are very familiar, used that excellent VA loan that we all get access to, no money down, low interest rate, no mortgage insurance. Did a house hack, so I bought a duplex, lived in half, rented out the other half, and that's really where I got the bug. We've just, many of us have read the Purple Bible with Kiyosaki's Rich Dad, Poor Dad, and that's where I think, got the initial interest. But we've always been interested in real estate and just other means, of taking control of our financial future. So from that first duplex we bought, got the bug, and then, the next year we bought 2 more houses, and the next year bought more and more. One thing I always tell people is that every year since that first year that we bought that duplex, it was about 15 years ago now, we've bought more and more real estate, either in, number of doors or valuation. We've done a lot of 1031s, and we've scaled up ultimately to build a very large portfolio across the country that has allowed us to retire from our career paths, my wife and I, early in life. So after I left the Air Force, we moved out to Colorado, which is where we're still at today. Worked in private practice for a few years and continued to invest that entire time. But we only practiced in the private sector for probably about 4 years. Ultimately, we'd already been investing for many years. to the point where we got to the point where we could actually replace our income as doctors through real estate investing, right? That didn't happen overnight. That happened over many, many years of consistently investing, especially when we started to explore investing in other markets throughout the U.S. where there's maybe better opportunity than our own backyard. That really helped to expedite our goals. But that was a birthplace of rent to retirement. It's a simple fact that we had a lot of friends and family and colleagues that were saying, hey, I see what you're doing in real estate and see the success you're having. We want to invest as well, but we don't have the time, the energy, the know-how, especially when you're thinking about investing out of state. Can like you help us? And so that's before we even really knew what turnkey was. We were already operating in that space where we assisted many investors just following the same path, we did. And so fast forward to where we're at today. As you nicely mentioned, we're one of the larger turnkey providers across the country. I think we did about 1,000 doors last year. We work in 11 different markets, Midwest and Southeast, mainly focusing on single family, small multifamily, and some new construction projects, basically where we have all the teams set up to help people, expand their portfolio, get started investing, diversify and scale. It's been quite the journey.
Man, 1,000 doors. That's that's pretty significant. And there's a lot to unpack there. But you said something very interesting there at the end that I'm curious about, and I'm sure we'll dig more into this at the as we go. But do a lot of turnkey companies do new builds? I that's not something I've heard much about on the turnkey world.
Yeah, I mean, when you hear turnkey, it is one of these buzzwords, right? So it's like, what the hell does that even mean? It's all, we like to define what we mean when we say turnkey, but generally when you're thinking about turnkey, you're thinking about someone that's rehabbing a 1920s house in the Midwest, right? Sticking a renter in there. About half of what we do, 50%, is the build to rent space. It can still be turnkey in the sense when we define turnkey, it's a house that's either newly built or fully renovated, leased and professionally managed. There's a lot of benefits, especially in the markets we're operating in now, like Alabama, Texas, especially Florida, where there's a lot of opportunity in the construction space where you can come into like immediate equity with a brand new house in an A-class area and still have positive cash flow. So I don't know that a lot of people participate in that space, but that's an area that we've seen a lot of success with, that we're personally investing in a lot, and have decided to partner with builders in the builder rent space.
I love that. We'll definitely have to, man. I mean, because there are definitely markets where, like you said, you can come into equity when you're done with the property, and with a brand new house. I mean, everything is new, so your capex is going to be great for 15 to 30 years, and if you're into equity and it's going to break even or cash flow, and you're not paying a lot in expenses, that can be a definite win, more so than a 80-year-old house that's been remodeled, especially right. if the remodel wasn't done great, which I know you guys actually go and replace all the appliances and do everything, or the actual systems, and do everything up to scale, rather than some of these companies out there that just kind of lipstick a pig and say it's good.
It's turnkey, right? That's one of those buzzwords. No, but we love the builder rent space because, I mean, really, I think one of the advantages is being in the path of progress too. Like if you're just, especially in the Sun Belt, where we're seeing a lot of population trends moving. I mean, there's a lot of areas that, and we focus a lot on sometimes like secondary markets. So not mainly like an immediate metropolitan area that's super expensive. For example, Orlando, it's very hard to cash flow in Orlando, and real estate is through the roof expensive. But there's a lot of surrounding areas like Polk County that's within an hour commute or less to central Orlando that, it's much more affordable and you can actually cash flow there. But there's people moving there in crazy amounts. And that's being in the path of progress. And that's where you do get that appreciation and rental growth, even if you are break even with high interest rates year one, but you're having a 10, 12% rental appreciation year after year. That's where we've seen the most success long term. So we do a lot of that stuff.
Yeah. Yeah. And I mean, that's all, you're probably running the numbers there on long term. And some of those places you could probably do short term rentals with. And, if it breaks even long term and you're able to do a short term, but it's not an HOA or whatever, you could crush it. I've got friends who do build to rent in like St. Petersburg with, short term rental plans, and they do great. I mean, granted, they're luxury houses and a little bit different ballgame, but same thing. He's walking into equity and he's crushing it in the cash flow game too. But it's a very interesting game. And then the other thing too is I've got a friend who's doing 2 new builds in Vale, actually right around the corner from you, and he was talking about how much simpler it is to just build ground up than to do rehabs because you know exactly what you're getting into.
Yeah, I mean that's sometimes a double-edged sword or catch-22 because construction is a little bit of a nightmare in terms of where we're at right now. It's getting better, but like throughout the COVID era with supply chain shortages, and then like in some areas of Florida, we had, for instance, in Southwest Florida, we had a hurricane this last year. It wasn't actually devastating. It just, honestly, the worst part of it was permitting delays. The permitting office shut down for five weeks. So, I mean, there's just those sorts of things. And I think you just got to be conscious of like material cost increases because inflation is real. But you know, build to rent is it's a great way to come into immediate equity. And, you know, if you're patient and you can go through the build process, you know, I think those houses generally in good areas will do better long-term than a Midwestern 1950s house that's a rehab. Don't get me wrong. We do that stuff too. And everything has its place. And those are like the most recession proof type of markets as well. But yeah, it just kind of depends, you know, on what your investing goals are and, you know, what makes sense.
Yeah. Yeah. And well, we can keep talking through assets and strategies and your model. But before we do that, we should probably, what I should have done before I asked that is like, we probably should have defined your ideal client. Like what makes, like who is turnkey right for? Because I know people hear turnkey and a lot of times they're like, well, that's great, but I could probably make a better return on my own. And, you know, as we've discussed, in a lot of cases, yeah, you're probably right. But you also probably have a whole lot more work and a whole lot more time invested and a whole lot more. If you're out of the country or you don't have that time or you don't have the ability to put in the work or you don't have you name it, there are a lot of situations where turnkey really is a better option because you can still get I'll let you, this is what you do, so I'm going to shut up.
No, I mean, turnkey is a great path to follow for a number of different people based on their investing goals. And that's really it. I mean, really and we work with investors that are brand new, never bought a house, first time investing out of state, to very successful investors that are full-time, you know, people working on large multifamily properties. And they just want an easy place to park capital to get their tax advantages because they're too busy with their own stuff, you know, their own projects. So, I mean, it's a whole gamut, but I think turnkey is a great option for someone that, as I mentioned, is just getting started or getting started out of state, someone that wants to be generally passive. And I always want to use the disclaimer that no real estate is truly passive because you still need to manage your property managers and, you know, you need to monitor. You're still going to have tenant issues, right? Just like any real estate, you're still subject to all those risks. However, it is generally more of a passive approach where all the systems and teams are already established and, you know, you're really looking to purchase it. So we have a lot of people that, you know, are full-time professionals that are engineers, attorneys, doctors, whatever, that are or military members that are, you know, they have their full-time job and they're taking that capital to put it into real estate because they don't necessarily want to be an active landlord. We have a lot of people that are also full-time real estate investors that use turnkey as a good way to diversify and scale. Scalability is the name of the game here. And this is an easy way to immediately tap into a market where there's opportunity, but you don't have to build your own team from the ground up, right? And so, as I mentioned, especially this past year, as you know, the cost segregation and accelerated depreciation numbers are still pretty attractive, and they're at 80% this year, which is still good. We have a lot of full-time flippers and stuff that, you know, they're not keeping those houses, but they still want to own real estate long-term because that's really how you build wealth. And so they'll come and, you know, buy a bunch of some of these houses with us just to run cost seg studies on and things like that. So it just depends on what makes sense for you and what fits into your goals. And, you know, I think a lot of people that invest in turnkey usually are investing in other things as well, right? But this is an easy way to tap into real estate where you have a higher propensity for success because we have proven track record and teams established in these markets.
That makes sense. Yeah, I like that. Yeah. So what market, you mentioned Alabama, Texas, Florida. I know you guys are in Little Rock, which is my home of record. But what other markets are you guys in?
Yeah, I mean, Florida is our most active market right now. It's just that's where the opportunity is, and that's all new construction in Florida, minus a few duplexes we'll rehab. But That's just, I mean, Florida, for example, last year had the highest percentage population growth. Texas beat them on actual numbers, but Florida's number one for population growth. And that's a trend that was not slowing down. We try to choose markets, David, that are going to allow for like a comprehensive approach to building a sustainable portfolio long term. There's a lot of things to consider. Things like landlord friendly legislation, low taxes, future population and economic growth, diversity of economies and industries, right? We're just not reliant on oil or gas or something like this. So, we work in the Midwest and Southeast. The other markets in the Midwest, we're very active in Kansas City. Probably our two Midwestern markets that we're most active in is Kansas City, Missouri, and then areas around Cleveland, like secondary markets, as I was mentioning, like Barberton and Akron. Those are areas that, they're actually still seeing growth. And they're just really good bread and butter rentals, that's recession-proof areas that are always going to be rented out and have a little bit of growth long-term, a very safe type of investment that's really accessible because it's a $150,000 house that is in a B-class neighborhood. It's just kind of a blue-collar type of renter and pays the bills. So those are our main markets. Other areas that we have a little bit in Tennessee, as you mentioned, Little Rock. We have an excellent team there. And we do have some stuff in Texas, although Texas has high property taxes, so sometimes we have to combat that.
Yeah, Kansas City's right down the road from me too. I'm in Springfield, Missouri right now, so all my stuff is about 2 hours south of KC. So,
yeah, man, excellent market.
Yep, I like it. Yeah, Kansas City's been hot for the last 5-6 years for sure. Springfield sucks. Don't come here. Don't invest.
Save all the good deals for us, right?
Yeah, it's terrible place. All the meth. It's great. Very stable. Very possible cash flow and lots of growth for sure. I mean, we just got our first Buc-ee's, so
up and coming. I love it.
Yeah, two Whataburgers and a Buc-ee's. Texas is moving in, I guess, but yeah. So. That's awesome. Okay, so all right, we've covered new builds. When you guys do a rehab, I know when we talked on the phone with you and Adam, one of the things that I like talking to you is that you guys do an actual update of a house, not just lipstick the pig and call it turnkey and be like, it's good, high five. We aren't going to give you a warranty. Not that you need a warranty, whatever, but you guys actually update systems. So I'd love to hear you touch a little bit on what your renovation process looks like and why you consider yourselves like a true turnkey company rather than just kind of a lipstick company.
Yeah, and I'll address that first because if anyone has been in the turnkey space, and this is like anything with business, right? Like you get a few bad actors in there. It's easy to sell a terribly rehabbed property to an out-of-state investor, right? And there's been plenty of people that have done that. And these are usually scenarios where they're like all cash transactions. You're not having your normal due diligence of inspection reports. You don't have a lender involved. I mean, those are all things to be somewhat wary of. And we always encourage people to go through the normal due diligence, right? That is important to protect you as a buyer, also protect us and make sure that if anything's missed, that we're going to cover that. And, I think where problems come with turnkey is that you get some of these bad actors, right? I mean, or there's also this scenario too, though, that some people, and I think this is worth mentioning though, some people that are brand new to real estate, they want to own real estate, and turnkey is an easy way for them to do that as it is. But then come to find out they're not really a person cut out to be a real estate investor. And that sometimes reflects bad on the turnkey provider, and it's really not them though. If you're a person that's going to lose sleep at night because your tenant may not pay rent or something like this, or you have to go through a tenant turn or possible eviction, like that's just a risk of owning rental real estate, and you do have to realize that. But to answer your question, David, on the rehabs, we have a standard to go by. Usually there is a 10-year threshold that all the major systems, roof, HVAC, they need to have, your hot water tank, they need to have 10 years of life expectancy in them. Otherwise, they're fully replaced. All things structurally, we don't touch anything if there's a structural issue because those are usually rather expensive. Roof, same type of thing, 3-layer shingles. And it does vary geographically speaking, but most stuff with these type of rehabs, they're all brand new. You do have manufacturer warranties, and typically there's like a 90-day or something with if there's something that goes wrong with one of these systems. But we also work with people. We have a great reputation publicly, and that's because when issues do arise, we work with people to take care of them. It is to our advantage to keep people, make sure people are successful, and come back and buy more. No one's here in the investing game to buy one turnkey property and retire tomorrow, right? This is a lifetime journey, and we want to keep people happy and successful. So. We go through and we have a standard rehab. We have the you have your inspection report. If things come up, we'll review it. But sometimes also in these B-class houses, in the Midwest, they may not be getting granite countertops, right, and hardwood flooring, but they do have nice cosmetic rehabs, and that's appropriate for the location. Yeah, and that's all really what you need in a standard rental, right?
Yep. To your point on reputation, you don't want to be the name that popped into my head the moment you said cash transactions without lender inspections, because I think everybody knows about the one turnkey guy.
Yeah, with the initial CM, right?
Yeah, so went burning a year and a half ago, and the whole world was like, "Oh, that guy."
Yeah, so, moves to Spain or Portugal or something. But yeah, we, and it's unfortunate, and sometimes it gives turnkey a bad name. But like I said, we've worked hard for our reputation, and we do this business because we enjoy helping people, right? I mean, we have a large portfolio right now that serves our financial needs, but we enjoy real estate. We're passionate about it, and we enjoy helping people reach their goals and kind of learn about real estate. That's the same path that we followed.
Yeah, I think that's smart. Yeah, reputation is definitely important, and you guys are obviously doing good things if you're able to maintain that and maintain the flow of business and the path of progress. I like the Florida thing and the new build thing. What's the trajectory? What's the goal over the next few years for rent to retirement? Where are you guys headed?
I mean, we always have our pulse on new and upcoming markets, and we're interested to see where things are going to evolve. I mean, we're in a really interesting time right now, right? I mean, it's a lot of people are wondering, what do we do? There's these higher interest rates. Are we in a recession or not? We have an election coming up before too long. We have banks going under, and the second largest, bank collapse in history in the U.S. with SVB. So people are just concerned. And they're wondering, where to put money. We have a standard. I'll say this: we want to be in areas where real estate is going to make sense, regardless, whatever the hell is going on in the world. Because before this, it was, whatever other shit there was on the news, right? Like, and I won't go too much on my soapbox here, David. But we had COVID, right? And then pre-COVID, everyone's like, holy shit, don't invest in real estate. Don't. The world's going to end, and it was a terrible thing in a lot of ways, right? But then we had like one of the largest real estate booms ever, right? And for the people that decided they weren't going to do anything, well, you really missed the bus there. And then we had, a lot of other things happening. There's always something that's going on. So we try to focus our investing in areas where we just know there's going to be stability and there's always going to be rental demand. If you're in an area where there's a discrepancy between supply and demand, and you got people moving there and new jobs and transportation being created, you're going to be okay. And real estate is a long-term journey, and really over time, right? It's like, unless you're trying to flip the house, if you're owning for long-term wealth and generational wealth and letting that compound over time, you just want to be in areas that are going to cash flow and do well over time. Those are always the areas we focus on. And so while we always have our ear to the ground to the next exciting market, and we'll always invest. Usually we go in and we build our team for a couple of years, at least a year, and buy our own real estate in these areas. And there are some up and coming markets that we're focused on, but we like to always just build more. Do more in the areas that we've just been successful with. So a lot of the Midwest, Florida's been exceptional. Until it's underwater, it's going to be a great real estate area to invest, and we're going to continue to do that. We got some other stuff we're going to do internally, just from our business model, as far as like being more hands-on with people and coaching programs and things like that. But the fundamentals of real estate never change, and so we're just working on perfecting things in the areas we focus on.
Yeah.
Sorry, that's a really long-winded answer for that.
No, so. But it sounds good. But that one of my next questions was going to be about the market, and it sounds like your answer to that is essentially keep buying if your strategy is to keep buying.
Yeah, I think Florida is one of the best markets right now. There's no income tax, generally affordable housing, especially in some of these secondary markets that are outside of like areas like Tampa or Orlando. We do a little bit in the Destin and Pensacola area. Those absolutely could be shorter midterm rentals with all the military installations there, right? So those are good areas, but areas that are outside of the metropolitan area. I think looking at the tax side of things, areas that where the property taxes aren't crazy high, that's a lot of where we've seen success right now. And so Florida is probably our hottest market, and probably will be for the next few years until something dramatically changes.
Yeah, understandable. I mean, like you said, population trends, politics, tenant laws, like a lot of things going for it. I don't necessarily understand or know enough about Florida's like marijuana and gun laws, which are hot topics for the same kind of people. It's like, man, if you want all the libertarians in one place, you just got to make sure you got the taxes, the gun laws, and the weed, and you're good.
Dude, that you summed it up right there. Yeah.
Like if you got good tenant laws, good gun laws, good weed laws, and good taxes, you got all the libertarians in your state.
Yeah. Yeah. I mean, Florida's pretty close, right? But
Yeah.
maybe the weed thing is the one,
Yeah.
the one that they don't have.
Missouri just legalized it. I never expected that to happen.
Did they? It's probably half the country now. My wife's Canadian, and I remember. I mean, I think it was about 2 or 3 years ago that Canada just legalized it throughout the entire country. And I just feel like we're moving that direction. We'll see, but I feel like we're moving that direction too.
Yeah, Arkansas still adamantly against it, but it's whatever. It's interesting to me. Not that we need to totally derail the entire podcast conversation, but it's interesting to me to be like, I can get hammered drunk. Nobody cares. Can't do that though. It's like, anyway.
Well, that's why you take those vacation retreats out to Colorado, right, David? Where you're doing your investor meetups and
It's legal here now.
yeah, there you go.
Can neither confirm nor deny. Yeah, I've definitely, I've been out to Florida a little bit over the last couple of years, mostly Panhandle, Pensacola area. I got a couple friends out there, but we're actually doing an in-person event in Tampa end of May for anyone in my mastermind, and I'm excited. I've got a couple friends who live in Tampa, St. Pete area. I've not been there, and Florida's always been a place that I've thought would be cool to maybe end up one of these days. And so who knows? Maybe Tampa ends up being a scouting trip for me more than anything else because I got a couple friends moving there. So you just have to keep me in mind if you rehab a duplex in that area.
All right, man. Got your name on it.
There you go. Speaking of, because I was about to ask a VA loan question, but what kind of financing do you guys roll for? I'm sure you guys have lenders in place, but I'd imagine a rehab duplex wouldn't have an issue with a VA loan, but that's probably not ideal for most of your clients. But does it matter like when you guys are doing these turnkey projects? Do you have people doing house hacks with some of your duplexes? Is it different kinds of financing? That's a whole bunch of questions all at once. But
well, I mean, the financing is up to the investor, just whatever makes the most sense for them. If I would say there has been a handful of people that have done house hacks, but obviously it's like you need to live in that location as well, or be willing to move there. Most people that are buying they live in an expensive area, and it's hard to get the local cash flow numbers to make sense for them. They're investing out of state where there's just better opportunity. Same process we went through as we grew our portfolio. So they're just buying it as a pure investment property. And to us, it doesn't matter, right? I mean, we have how you finance it. We have many financing resources for you. I'd say a lot of people are using conventional loans where you're just putting 20 or 25% down on a small or on a single family or small multifamily. Or we have a lot of people that invest through, say, a self-directed IRA, solo 401k. If they need non-recourse debt on that, there's those type of lenders available. If someone is self-employed or can't use conventional or max out their conventional, there's all sorts of portfolio type of lenders, private lenders, and non-QM money available. So it's really up to you. I mean, our job is to provide you with the resources based on financing that are going to allow you to accomplish your goals. So ultimately, it doesn't matter what you use.
Yeah, it makes sense. It's good point. And as long as the asset works, if you go 20% down or 3.5% down or whatever, as long as it works for your investment style, it shouldn't really matter.
Yeah, absolutely.
Yeah. So what is, I mean, you've bought a lot of stuff. We don't have to talk necessarily specific to turnkey at this point. What is your favorite for you? I mean, do you like the luxury, short term, crazy? I mean, you've got some pretty high end, big luxury rentals in Colorado. Then you got some multifamily investments, and you got all the turnkey stuff, and they're all not even remotely in the same style of property. I mean, a 20-person, multi-million dollar Colorado short-term rental is not close to a Midwest single-family turnkey property in any way. Just curious, like, what if you have a preferred flavor for your investments, which ones you enjoy the most right now?
Yeah, and that's always evolving. I think that's a cool thing about real estate is that there's just so many different ways you can, so many different asset classes, locations, different ways to creatively participate in real estate. And I would encourage people not to try to do too much at once because then you don't really do anything well. But once you kind of learn something and you feel comfortable with it, and then you kind of scale and take the next step up, that's the path that we followed. And so I'll get excited about something and then we'll learn it and kind of master it. And then we'll kind of grow our portfolio and our knowledge base to take on the next investment class. And I think also just going back to the turnkey thing, I think that turnkey is a great way for people to get in the game to like have a baseline understanding of real estate without taking a huge pitfall or mistake that could set you back years or decades. But it builds your confidence to be able to go on and maybe do some more on your own, maybe go into the larger scale stuff. Most the trajectory what we see people follow, and this is exactly the same for us, is buy single family, maybe in a couple different markets, have a little bit of diversification, add in a little bit of small multifamily to that, get your baseline, make sure you're performing well, you're not over leveraged, things are going well. And then you can trade up, right? You can get into maybe a little bit larger multifamily, mid or large multifamily, maybe into some other commercial type of projects, but you just don't jump into that right out of the gates. And you're likely not going to qualify for financing going into those larger projects, at least not reasonable financing either. So you're building your track record and confidence, and that's the same process we followed. So we've a lot of what we've done now, though, David, is we've actually gotten mainly out of residential. We still have a handful of single family and small multifamily properties, but we've gone through multiple 1031 exchanges to just trade up because we built equity just holding real estate and letting it do what it does with appreciation and debt pay down. And so we've transferred a lot of our capital into the commercial retail, actually is what we own the most of. But I really like and those are great. Let me explain that though. This is stuff that we're not doing value add on this. We're simply taking our portfolio and our business capital and putting it into commercial retail centers as a truly long-term hold. And this is really passive. Like I would consider that turnkey as well. We buy turnkey in that sense, right? Because you have triple net leases, you have long-term leases with sometimes corporate tenants that are businesses, and your lease could be 5 or 10 years, and they pay all the expenses and taxes. There's no variability on those, and we do that though because it's very passive. And it's in really the tax benefits. So we take those, we run cost segregation studies, accelerated depreciation, and we wipe out 100% of our tax liability every single year. But that's what we own the most of at this point. I think we have 11 different commercial centers. But I really do enjoy the short-term, the kind of higher-end short-term rentals, because I think that at least this isn't a huge area of knowledge for me, but I do know the area that we factor in, which is high-end properties in Summit County, Colorado, where you don't have short-term rental regulations, and there's just not a lot of those type of properties like the one you were mentioning that is a 10,000 square foot 9-bed 11 bath. That's the only, and they're all in suite rooms. Like there's nothing else in that area that accommodates for that or anything similar to it. And so that allows us not to operate in the short-term space where like you're in the 80% median where you have a cap of how well you can do, right? Because there's so much competition. So we took that one property, we bought it for 3.2 last year. And it was already a short term. It was doing 300,000, and we're already booked on this year for over 500,000 because of how it's just managing it differently, right? And then we can go into a whole lot of detail about this, but I like being in that kind of upper echelon of properties, top 1%, where you just don't have the competition. That stuff's exciting.
Yeah, because you're fighting at that point. You've got big groups which can afford to pay, or you've got people who are really well off, and both of those groups can afford to pay. And like you said, not a whole lot of competition.
Yeah, there's people that do small weddings there. I mean, it's just people in a vacation destination like that. People want to come together and spend time with family. We have people that are coming there, and just the ability to accommodate multiple families comfortably. There's probably a handful of houses that are even similar to that. So yeah, that's been a lot of fun to learn that stuff.
Yeah, my buddy it's interesting. So he's building 2 build-to-rent houses in Vail, but he's overseeing 4 condos that are going up. And I'm gonna butcher all of this. They're in Vail, and I want to say they bulldozed. I think they bought a house for like 13 mil and bulldozed it or something. I mean, it was stupid.
Build.
Like they bought something for like a ridiculous amount of money, bulldozed it, and they're building I think 4 condos. And each condo is like 6,500, 7,000 square feet. And they're all 6 or 7 bed. But they're all like, you could literally ski off the mountain into, they're skiing. You can walk to the lift, but you can just ski off the mountain and just keep skiing into the mudroom.
Do you know what he thinks those are going to be worth when they're done? I mean, Vail's a whole different ball game too, but it's like,
I want to say the number he said was that they're going to be somewhere in like the 65 to 72 range is what they're thinking. And their all-in cost is going to be like 50. So, I mean, it's ridiculous. They're number 45 or 50. So they're looking at like a 10 or 15 million spread or some craziness, but then they're going to Airbnb them and all. And he's just managing the project for that one for someone else. Those aren't his actual builds, but this is all, 2 months ago. So my numbers are probably super rusty, but it was just very, very mind-blowing to me and my Springfield numbers to hear someone say like, oh yeah, we bought this house for this much and leveled it to build these. And I'm like, what?
It's just absolutely insane. Vail's an old town, and it's it's just crazy looking at houses and what they're worth. It's all that just shows you geography, how important that is, right? But I think another good point in what you're mentioning is that as you scale over time, sometimes the same principles on smaller deals apply to larger deals, and you can build in real like crazy amounts of profit on larger deals. Granted, there's more risk. You may need to bring in investors, but that it's so crucial to learn things and cut your teeth and learn the concepts on smaller, less riskier houses, Midwest single family houses and things like that. Because as you scale up and grow, if that's a path you want to go on, like, yeah, you can build in a $10 million profit margin on a deal that may not be more work than a $200,000 house that you're scraping and building, right? So more money, but that's one thing we've learned over time too, is just like some of the larger, better deals we've done have been less work than less profitable deals. That's just real estate. But
yeah, and I think the private lender on this thing is some billionaire out of Florida, so it's a pretty. They're not using a bank. It's a very interesting. Cool dude. I'll have to connect you with him sometime.
Yeah, why don't you have your next retreat up there, and then I'll come visit you in Vail.
There you go. Yeah, I'll let you know. He's a good dude. Anyway, so all right, so we've got the short terms, we've got everything else. Man, that is the high end short term rental stuff that's cool. That's pretty interesting. And the 1031 into the commercial space, I like that. I like the triple net. I like a lot of that stuff. I mean, I love hearing about the flips, and I've thought about some triple net commercial stuff a couple times. I've done some land stuff that's super passive where I seller financed it off. I've thought about doing some commercial stuff, but so the other thing that I'm curious about is rent to retirement. I don't know if you want to talk the business itself, but like I'm curious how what your company looks like. I mean, that's not 1,000 doors is not a small feat. So I mean, obviously it's not Zach, a one-man show running rent to retirement, but like how long has that been around? How long did it take you to get up to that scale? Like, what are some of the lessons you took away over the last couple of years building? I mean, that's not a small feat. So, I don't know, high five, kudos.
Yeah, thank you. It's definitely been a journey, and there's stressful times, right? There are times, because I meant it 100%, David, when I said that I do this business because I enjoy it. I don't always enjoy it, but we're passionate about our vision. In our mission, and that's to make real estate accessible to everyone. and to give people principles that will help them to be successful. But it's been an evolution over time. I think we've been in the turnkey space for about 11 or 12 years now, but rent to retirement itself is kind of, I think this is our probably ninth year now in 2023. So we're branded and really operating in the turnkey space. And our first year, I think we did like 20 doors or whatever, which was definitely a lot at that time, and in some cases even harder than doing many more. But we have a team of about 22 full-time in-house employees. A lot of our teams are contracted out though. And so we don't own any of the property management. We don't manage properties now. There's a point in time when I did do with management, and no, thank you. We found it to be better, just better equipped, like empowering and teaching and building teams locally, either partnering with someone that's already there doing a good job and kind of like bringing them into our system, or kind of building it from the ground up. Management is hyper local, and it's important to have those teams there. And then we have our rehabbing crews and builders they're all partners or 1099 contractors. So, and they come and go. Sometimes you got to hire and fire. Sometimes you got to go through 20 contractors to find a good one, right? And that's really time intensive and costs a lot. Also, another benefit of going the turnkey route is like we've done that sweat equity for you, and found the good people to work with. But businesses change over time. But as far as our evolution, I mean, yeah, it was it's just flowing by, and it's really interesting to see how the business evolves with kind of our direction, and it also is scary sometimes too, because you get more into the public light of, hey, this is a team that has been around, they probably are doing well, there's probably capital there, because real estate there's a risk with that as well, and when things don't go according to plan for people, sometimes that leaves a target on your back. But we do our best to just do right by everyone, and because of that, we've avoided all lawsuits. Knock on wood. But because it doesn't always work out, right? And I'll say this: when you're working with anyone, this is not just turnkey, but in business in general, but especially real estate, like everything. A company is truly tested when things don't work out, right? When you have a tenant that is not paying rent or evict, is like, what kind of communication and support do you get in those times? If you got a tenant in there that's paying rent and you're cash flowing on a property, like fantastic. Like that's not that difficult to do. But I've been very proud of our ability to problem solve for people. Just being creative and problem solving is what's simply allowed me to be a successful real estate investor and business owner. And I've really enjoyed that. That's kind of the constant learning and evolution. And I want to say something else to the military community as well, is that, if you're still active duty, now is a fantastic time. I mean, we did this as well, but I mean, I remember during the military, I mean, we love it or we hate it, sometimes both, right? But it is a unique opportunity where you develop skill sets and things like this, but you actually have time. In most cases, unless you're like first sergeant or whatever, right? It's like you usually have time. Granted, if you're deployed, I get that. But even then, you have time to educate yourself. You have time where it's like, okay, during lunch or before and after, you can really dedicate yourself to, building this side hustle of real estate. And I encourage you to take advantage of that. I remember there was times in between patients where I was calling, or at lunch when everyone else was in the lunch break, I was in my office with the door locked, right? And just calling people, making deals and negotiating things. In Grand Forks, the town is 40 minutes away. So to and from work, sometimes in the winter it'd be an hour and a half. So, making calls and things like that. So if you have the hustle, like, now is the time to really get out and do it. And not to say if you're, out of the military, it's too late, but certainly in the military, this was a huge opportunity for us to grow our business. And I don't know if I would have been able to do that in the private sector, just as you don't have much time availability. So I think about that sometimes. I just wanted to mention that.
I agree. Yeah, like everybody's always like, "Oh, hurry up and wait." Like, yeah, while you're waiting, pull a book out, read, put it in your cargo pocket. I don't know. Like, yeah, first sergeant might not like you carrying stuff in your cargo pocket, but if you pull it out and you're like, "I'm trying to learn," maybe he'll shut up.
I love it.
Who knows? So, Zach, did we miss anything?
We could go on and on, David, about we didn't talk too much military stuff, but no, man, this has been cool. It's a pleasure to be on here, and I love what you guys are doing. I remember talking to you before the show, and it's just like, your story, and I know you talk about that a lot too, but just how you just wanted to create community, give back, and then look at how things have just exploded over time. And that just goes to show, like, if you're putting out, good things into the universe and the ether, and you're out there, like, you love real estate, but you're out there teaching it and stuff, like, that all comes back to you tenfold, and so it's really cool to see that and collaborate with you. So thanks for having me on.
Well, I appreciate it. Yeah, it's been a pretty wild ride. It's been good times. So, well, obviously, renttoretirement.com, I would assume is the link, but I'll let you plug where people can get a hold of you personally if they'd like to, and where people can get a hold of Rent to Retirement.
Yeah, absolutely. I mean, we try to put out a lot of education about real estate in general, not just turnkey. We put out education just on the markets, what they're doing. We just came out with our top 20 markets for cash flow for 2023. I just wrote an article about the top 5, which was a top sponsored article for Bigger Pockets, came out last week, the top 5 recession-proof markets. So any of the resources that you need, the website is a place to go to. It's renttoretirement.com. That's renttoretirement.com, where you can check out all our social media platforms, check out our markets and inventory. If you're interested to learn more about turnkey investing, schedule an appointment with an investment strategist to kind of go through your goals and criteria, tell you about our markets. We don't charge investors anything, right? We make money when we flip the properties, so it's on the sale. So all the time in the world that we spend with people there's no cost associated with that. If you're listening and you want to call 800-311-6781, talk to our investment strategist to get you set up for a time. So please reach out. We love talking about real estate.
I like it. I like the phone number. That's good. I don't know that anyone's ever dropped a phone number like that before. That's a good, smart marketing move. I like that. Well, Zach, I'm glad that we finally made this work, and I appreciate you coming and hanging out. I know we're gonna eventually do some webinars and stuff in the Facebook group too, and do some education. But thank you once again for coming to hang out with me on a Wednesday afternoon.
Pleasure's all mine. Thank you, David.
Have a great day.